Hanson, can you mute? There you go. Thank you. Hanson, I'm going to have to mute you, bro. All right, guys. So welcome to another Twitter Spaces with Kalu, right? It's the end of the quarter. We've done 3 months. That's super, super cool, right? So let's talk about what happened in the quarter. It's going to be more like an open house, right? What went well in investments this quarter? What should we be looking at in the next quarter? So, man, I've got Obiageli right here, and she's a co-host. So if you want to speak, just send an invite to her or to me. We'll just pull you up so you can talk. Nothing really to talk about in terms of performance. I'm going to share a few tweets for you guys to show you what's the best, like asset class that folks invested in, say, this quarter. I mean, for the quarter that has just passed, the top performer, of course, was energy. No surprises there. Crude oil and crude oil derivatives of, say, USO ETF, anything to do with energy, Occidental, ExxonMobil, all those guys were up big time. And we saw Warren Buffett, making a play for that stock, buying about 10 billion worth in energy stock. So energy has been the only stock per se, that sector that's been up in 2022, right? We did see as well the US dollar, right? Essentially come up again, just as US rates are going up, right? So it's oil stocks, it's commodities, gold, palladium, because of the sanctions. All those guys are up big time, right? So what's your portfolio doing? That's what we want to talk about. Where should we invest? What's your portfolio doing? I've got a few speakers. I've got Jessica. I've got Satisfied. Jessica, how's your day going? You want to unmute and tell us what you're investing in? Maybe give us your own tip and let's see if we can learn from you. Go for it, Jessica. Hey, Jessica, you're unmuted, so you can just go ahead and speak, yeah? Okay, I think Jessica has dropped off. Let's have, is that Silasfi? Hey, I can't pronounce that, guys. Silasfi, is that you? Can you unmute and let's hear what you got in mind?
I think that's elasticity.
Yeah, was that you? All right, so Satisfy, you can unmute and then just come up earlier, right? Yeah, I can see you. Go for it. So, what are you investing in, and what should we be looking out for? Yeah, you got to press the unmute button. Then that way you can speak, sir. Oh man, where guys not unmuted? Hanson, let me come to you. You were unmuted a time ago. Do you still want to say something, Hanson? Go for it, sir. Oh, Hanson, I'm gonna add you as a speaker. Yep, I got you, bro. So you are added as a speaker now, Hanson. Yeah, go for it.
Hello, House. Good evening.
Hey, how you doing? Finally.
I'm fine. My name is Silas City.
Silas City. Okay, got that down now, right? So what's going on with you, bro? How was your investing journey to Q1 2022? And what are you going to invest in this coming quarter? Tell us what can we learn?
The year 2022 has been awesome, and even before now, I've been hearing so many investment opportunities online.
Yeah.
So I was a little bit skeptical, and this online thing, the rate of scam in online, and so I just decided to give it a thought this year, 2022. So I started my online investment via affiliate marketing this year, and it has been awesome.
Hey, bro, we're talking about like investing in securities, like stocks, bonds, shares, that kind of stuff. That's what we're talking about. Do you have any like tip for us? Where you're putting money in?
Okay, actually, I'm still working towards that. I'm not really actually invested in towards that aspect.
There you go.
Towards that because that's some books I'm reading about that. Online stuff is not something you just put your money into. You need to study the system.
I hear you, bro. I hear you.
Can you hear me? Can you hear me?
I can hear you, yeah.
Alright, so I'm into that, but not actually, I'm still working towards that. So by God's place. I need to work towards the course I'm studying before I get involved fully into such business.
I got
I
you.
think that's all I have for now.
Great, excellent, yeah. All right, super, no worries. So guys, my stockbroker sent me like a list of gainers and losers, right? I'm going to share it on the screen right now, right? So I've got gainers and losers. The top gainer I see right here, this is year to date, but for March 2022, Academy Press, RT Briscoe. Man, these are like penny stocks. Academy Press, RT Briscoe. You've got Scoa, you've got Guinness, you've got PZ, Presco, that's foods, palm oil, Bua Foods, still up, Cortville, and all that. I mean, Academy Press is up 254%. Publishing. What have been publishing Academy Press? Who knows about that stock? She tells about it. What about RT Briscoe? Up 195%. I know the VP was there to commission their new assembly plant, but is that why they are up? What about Guinness? Up 82% this year alone. Interesting. Scoa up 128. These are all penny stocks. I mean, so I know what's going on there. I got my good friend, am I pronouncing your name right? Mr. Singh? You're my Bitcoin plug. What's up with the Bitcoin world going on? What's happening in that space?
So hi, how are you, Colin?
I'm very well. Yeah.
I would say securities-wise, I would recommend Tesla is a great stock.
Oh, I like Tesla. Yeah.
Tesla, I would say everyone should study the company because they are like 4 to 5 years ahead of any other automaker in electric vehicles.
Yeah.
So they are, they really push really hard on making better batteries and making better electric cars. They have two new plants that have opened up in Texas and Berlin.
Yeah.
So with these new plants, what they've done is they've decided that the rear and front casting will be all one molding. So all they do is pour in the substance into this casting, and it comes up with the front molding. So they actually eliminated almost like 700 parts in their cars. So they're innovating really, really fast. And I would say that's one equity that I love. Everyone should look into.
But then again, Singh, they just applied to do a split. They just asked the shareholders to give them approval to do a split. So stocks is up on Tesla because of that news of a potential stock split. And I like the point you make about the Giga Berlin and just the way they've revolutionized car making. What it means, I mean, you didn't go too deep into that thing. I mean, what it means is scale. They are building scale and they are changing the way cars are made. Like you rightly said, they just pour it in, they have a car chassis. The others have got to get this car chassis welded in, do all that kind of stuff. They are changing the way cars are made. Record deliveries in Q1 2022. That's for Tesla, right? And look at their return on assets, return on equities, super. I mean, I talk about them specifically this week. It's just a well-run company. Net profits, not so much, but just return on equity and assets is just really, really good for Tesla. I mean, I love that company.
And their goal, I usually take like a long-term view.
Yeah.
Their goal is to continue to grow about 50% per year for the next decade.
50% per year.
And this is where Elon at the top drives the company forward. And he pushes them. And the batteries, they weren't sitting with the batteries they had previously were pretty good. But now what they've done is developed the 4680 cells. So it's the next generation that's going to be put into these new cars. And with their new products coming in, the Cybertruck, in the US.
Oh, that's true. We're not even talking about Cybertrucks yet. Why haven't we spoken about Cybertrucks, right?
Yeah, because pickup trucks are number one in US.
Of course.
So once that comes to the market next year, you're going to see an explosion. And they're not just looking at the US, they're looking at the whole world and see what the market demand is throughout the world. So they're thinking of how can you build a small car that will work well in Europe and Asia. And then their next
Yeah.
to make more money for the customers and for the company themselves. So, they have a lot of potential that they can unlock in the future.
Yeah. So I mean, so that's why the stock is just so highly priced. I mean, the PEG growth ratio and the PE ratio for Tesla is really expensive. But I'm thinking it's because market is saying long term, this is the place to be. That are going to take over Toyota, Mercedes Benz, and the rest. So it's expensive. I mean, I bought that stock at 6 and I sold. I might have to go back in again and buy.
So for these ones, I would say like Tesla is one you just buy and hold for at least a decade.
Jeez.
Because these are generational companies like Apple used to be about 10 to 15 years ago. Or Amazon, 10 years ago.
Yeah.
So I think this is our Apple and Amazon of today.
Yeah.
So if you can just buy a little bit or keep dollar cost averaging, 50% growth per year, you will do really well.
Yeah, I mean, oh Christ.
And you had alluded to my other favorite asymmetric bet.
Which one is that?
Which is Bitcoin. I think you mentioned that, right?
Oh yeah, go for it. Tell us about Bitcoin. Great week last week, right? 47,800 it got to, didn't really break that 48, Is it because of that Euro news that came up on the cold wallet? What's going on there?
Yeah, so I think what happens is with Bitcoin is the short term, there's always news that comes in that moves it down and up short term. But again, same thing with Bitcoin. I would take the long term view.
Yeah.
I'm expecting the next 10 years compound annual growth rate about 75%. So this is where everyone should learn what is Bitcoin, why it's sound money. And as our fiat currencies continue to debase and they keep printing more and more, this is where Bitcoin will continue to go up. So everyone should study this asset class, which is it's the fastest to $1 trillion. It took about 12 to 13 years.
Yeah.
And this is something that people should not ignore in their investment portfolio. I would say everyone should have at least 1 to 5% in their portfolio. The only wrong allocation to Bitcoin, I would say, is 0.
Nice way. But see, let me ask you, what's the next Bitcoin, right? Bitcoin is about 47. Well, that's kind of, I don't have $47,000. Solana was up about 38 or 36% last week. I also saw this news about, is it Ethereum, and this company is called Scale. So Scale wants to make Ethereum a bit more user-friendly, cheaper, more energy efficient. Should we be also looking at some other lower currency, lower cap tokens out there that we can put money in for the next Q2, Q3 for 2022? What's your take on that?
Yeah, that's a great question, because there's a lot of players in the digital asset realm. So I would say Bitcoin is a unique asset in itself. The key to it is it's got a hard cap of 21 million. No one can change that.
Yeah.
And it's truly decentralized. So there's no CEO. So everyone should consider this as sound money. As your currencies debase, this is where people will store their wealth over time. And all the other cryptos, I would say they're like tech startups. They have a CEO, so you have to really study those asset classes well.
Yeah.
And I would say stick to probably the top 20. If you go on coinmarketcap.com, you can see by the market cap, the different coins.
Gotcha.
So Bitcoin has always been the top, and it's sound money. It'll always be at the top.
Yeah.
The other ones are trying to solve problems for banking, our fiat banking, which is always, it's always been slow, and they've never had competition before.
Yeah.
So those coins are solving problems for our fiat banking.
Yeah.
And the more developers in those spaces, then you can invest some in there.
Gotcha.
I would say 80% should still be in Bitcoin.
Yeah.
And then if you want to speculate in some of those other bigger market cap coins, you can make sure you research them well, and then you can invest a little bit in them.
Awesome.
Safest for the long term.
Yeah.
You can't beat Bitcoin, because if you put in $100 today, I expect it to be close to 27K is what I've done my calculation as an investor.
Wait, say that again, Singh. Say that again for me. If I put in, say it again so I can follow.
Yeah, so if you put in $100
Today, okay?
Given its 75% CAGR, compound annual growth rate, in 10 years, given compounding really makes a big difference, if you just didn't touch it, it should be just under $27,000.
Jeez.
So this is where the beauty is, the really fast-growing assets, if you don't touch them and leave them alone, over long term, they grow a lot. And the compounding is something I think we just don't understand. You have to put it on paper and see what it looks like.
Gotcha.
And that's where Bitcoin, you just buy and hold for the next 10 years. That's my recommendation.
I mean, so I have you talking about Tesla and Bitcoin as your two picks for Q2, Q3, maybe for 2022. Okay, Singh, don't go anywhere. Hang in there. I'm pretty sure someone's going to have a question for you.
I would say for the next 10 years.
10.
Buy hold these two. Next 10 years and you're good.
So just take some money and then just go ahead and okay, Singh, don't go anywhere. Just hang in there. Hey, I've got A of ANF. Did I pronounce that right? You can unmute and go ahead.
Yes. Hello. Yeah, my name is Andrew.
Hey, Andrew, what's going on?
That's why it's David. I just saw this space. I'm actually supposed to be co-hosting another space, but they're not on right now.
Yeah.
So this area is really interesting me because I'm really deep diving into NFT art and crypto space and everything, So my question is, okay, look, I'm old. I don't have 10 years. So I'm looking for investments that have a faster return rate.
Yeah.
Any thoughts on that?
I mean, are you trading or are you buying to hold? Let's start from there.
Sorry, say again.
Are you going to trade or do you want to buy and hold for the number of pairs that you have? What's your duration?
No. I don't have 10 years to hold on to.
How long do you have?
I want something like 2 years, like 5 years.
How much risk can you take?
Well, I mean, I am an NFT artist, and so I plan on also selling my NFT artwork, right? And also buying some NFTs to flip.
Yeah.
I'm in it for kind of like in the short to mid-term because I'm just getting, older and I don't, I'm not young and I see the future. I see the end now.
I hear you. So right now in the whole world, energy is the only, sector that is basically up in terms of price action. Then of course the dollar, because rates are going to go up. If you want something to trade this year, it's going to be quote unquote dollar based. Lots of dislocations in the market right now, which gives you an opportunity right now. Look at crude oil. What's happening in crude oil? America is releasing barrels, right? But we still have the Russian uncertainty. That's a quick play for you right there. Singh has talked about cryptos.
What about wind and solar energy because of the blockchains? The blockchains are moving to not having any gas fees, and the way they're doing it is that they're using alternate energy sources such as wind and solar.
That would have been a case point, say, before the Russian invasion, but now we're here in Germany, the green capital of Europe, saying they're going to reopen back coal, they're going to reopen back nuclear. We're here in the UK asking the three coal plants not to shut down. So that use case is a bit shaken out because of national security consideration. So I'm going to say, yeah, that's just my take. It's still a case, there's still renewables. But for now, I think we're going to see more investment in coal. I was shocked to find out that the second highest energy source in the US right now is coal. Number one being natural gas, number two being coal, even today as we speak, right? So because of what's going on, I mean, US has to supply natural gas to Europe. US has got to drill more coal and basically drill more oil to match up with what. So national security is trumping economics. So there's dislocation there. That's what I will say in terms of sector investing. In terms of individual stocks, you can see, Singh has spoken about Tesla, GameStop. GameStop is if you were you can take the risk, you have the stomach. That stock is a dead stock, but the price movements do go up and down in terms of GameStop. Singh wants to say a word. Singh, jump right in, sir.
So I was going to say, I think we in the crypto space we hear about 1000x and 100x easily. But I think given the Bitcoin that I'm seeing, 75% return per year, that is a really big number compared to what the average stock market gives you, about 8 to 10%. So as long as you buy and hold Bitcoin for at least a 3-year period, you're almost guaranteed that it will be an increase in investment. So you have to, once you learn about the space, it's a buy and hold. And I would say NFTs are very risky. I see them being around for a little bit, so if you can make a little bit of money selling some and stuff, I would just convert that to the sound money. And then I think energy will always be big. We all need energy to run. I think the currency of the world is energy. So as long as you buy commodities and energy stocks, I think they should do good for the long term. And I'm a believer that you should buy and hold and let compounding do its work rather than trading and you give the government money in taxes. When you trade, you actually lose a lot of that compounding.
And Singh, just so that we explain, right? Compounding is about buying, earning your dividends, reinvesting those dividends, bringing down your average cost so that you are reinvesting your principal. Exactly. Yeah. So Andrew, like Singh said the same thing. Like it's commodities. It's even the US dollar in terms of a short-term play. Really, if you want to get in and out, NFTs are risky because you could get lucky and get a good one and exit out on the upper end. Ape was very, very strong 2 weeks ago. I don't know where it is today. The Ape guys Ape Yachts came out last week.
Oh, I know. They sold one. Someone bought one for $130.
Yeah, I mean,
Just the other day.
Yeah, and they're up. I mean, look at Scale, right? Scale. Scale is trying to link up with Ethereum. They have this plan to make Ethereum a bit more, should we say, user-friendly. That's also some low-cap crypto token you can buy that if it works, it's going to Ethereum will pull it right up. So Scale, that's also something that you should take a peek at as well.
Okay, thank you so much. I think I'm going to buy your book.
Hey, go for it.
I'm so glad I came in here because you guys are the bomb.
Hey, thanks, man. It's all saying, it's all Obianuju and you. Thanks for buying the book, sir. I appreciate you saying that. Yeah, I got a book out, guys. Go buy it. Go buy the book or I'm blocking all of you from Twitter. Just joking. All right. Thanks.
Congratulations.
Thanks, yeah, really appreciate it. All right, guys, thanks. It's still open house, right? We have no particular order. If you want to say something, just basically jump in there and say your comments. I have a guy on Messenger asking me in terms of where would you invest if you had to invest for 5 years to retire? So I got SK2 asking me if they had to invest for 5 years, where would you put your money? Well, it's a simple answer, right? I look at what has happened in the last 5 years. But remember, like, past performance is not a guarantee of future performance. I get that. But what in the world has really performed the best over the last 5 years or even 10 years? Number one is US equities. US equities as an asset class, right, have delivered higher than above returns, right? Even better than the emerging market equities. So number one is going to be US equities. If you want to invest in US equities, I always recommend the ETF. In this case, the VTI. So the VTI ETF, that's what I recommend to invest in US equities. What has been the second best performer, right? In terms of in say 5 years, that's going to be real estate in the US. So real estate in the US. Again, I recommend VNQ. That's the real estate ETF that invests in US equity. So if I was going to invest for 5 years and I wasn't going to sell, like Sinka said, keep your money, compound it, I would do US stocks, I would do US real estate. Even now, as inflation is going to go higher, those guys tend to give a good hedge against inflation. So that's what I would recommend. That's what I would buy, do do your research, and then see if that works out for you. Hey, I got, is that Illuminate or Illuminati? Is that you, sir? You can come off mute. I got you as a speaker. Illuminate, yeah. You can come off mute, sir, and go for it. How you doing? I'm very, very well. Thank you, sir. Have you bought my book?
Hi, everyone. No, I get to get it.
How about, I have to pay rent, bro. Thank you, sir. What's up?
Thanks for all you do, man.
Yeah, you're welcome, sir.
Okay, I don't know if anybody has spoken about MTN, right?
No. Go for it. Did you buy MTN?
Okay.
Did you invest?
Yeah, I did.
I invested too. I think it's a very, very good decision. Let me just give you my case for about MTN. MTN right now, right, is the largest collection of Nigerians in an electronic marketplace. So in MTN, if you have an MTN phone line, you belong to a community, and now MTN knows you. Now MTN has got a license to allow you to send money back and forth legally and formally within that license, right? And of course, that then means that they have this massive market that they can sell to and they can leverage to, and they can just make a lot of money. Momo in Ghana is making more money than Nigeria's fintech and all that, because Nigeria has no Momo. So now MTN has got their own quote unquote Momo. So man, we're going to the moon. What do you think?
Yeah, fantastic. I also see what MTN is doing in East Africa. Even Safaricom is a good run for their money.
Yo.
And looking at the fact that Safaricom didn't really enter that market in West Africa market. So if MTN locks down East Africa, locks down West, and then definitely you are sure that this company is one of the Africa's biggest conglomerate. I'm also impressed with their performance, right? Look at it, their tax remittance to the Nigerian government.
That was a massive, man. I heard they paid. How much was that figure? How much was that figure?
700 and something billion bucks.
There was a quote there that they were the second, I think they paid 13% of Nigerian taxes or so. There was a quote there I saw that they pay some high number or so.
And 30% of total
Yeah,
taxes
30%.
and the federal government, you know. And so I think it's a company for the future, right? And if anybody has some, okay, I'm sure it's no longer in the market right now. Unless it's I don't think anybody will be selling right now.
Yeah,
So
I mean,
it's something I would like to move for probably the next 10 years. I see them doing, some magic stuff.
for me, yeah, I was very careful not to come out openly and say go and buy MTN, because you really can't do that. But if you bought MTN, you made a good call. MTN as a whole, on a corporate level, want to focus in Africa. So they're selling their Iranian and also anything non-African. They want to come to Africa and be the quote-unquote company for telecoms to grab the youth. They're going to do everything now focused on Africa. They're going to be the largest marketplace, the largest infotech, largest fintech, largest aggregator really of networks in Africa. So if you look at Nigeria, for example, 200 million people, 60% are below 40-year-old. They are going to basically be buying data because they have to go online. No matter what you do, you need data. MTN wants to be the provider of that data. So they're in a growth market. Africa is the only continent with young people. That's growth. So I just think it's a great stock, very, very well run. Look at the strategy they did. They couldn't get their money out of Nigeria, so they sold shares in Nigeria, and Nigerians diluted their risk, and now they have working capital to pay down their debt in Nigeria, which makes their balance sheet a lot stronger. I love it. I'm glad I'm a shareholder. MTN guys, please send me my bill for talking good about you guys. Yeah. So what else do you have in mind, man?
Honestly, Nigerian equities are really problematic you guys in the past. So I actually say I'm not doing Nigerian equities anymore. I also do real estate, right?
Yeah.
So because of the money market. When I saw this thing, I said, even also I had to get back into this with this guy because even if you look at the history of MTN, look at the management, they've been consistently, getting the right people with great mindset. Their strategy is on the look.
Yeah.
If you look at the competitors, you always see that these guys, they are always one ahead.
Yeah.
So for a company that's well run like that, I mean, you can give them your money and they go sleep.
I like that, bro. I like that. Yeah, I mean, let's just hope they don't let us down. I think it's a very, very good, it's a good stock to own, irrespective. It's a good stock to own. Imagine if they get into crypto. Just imagine what happens if MTN gets into crypto and does money transfers via crypto or via blockchain. Just imagine what happens to that stock. I buy MTN through the global, I think it's the MSI index. I buy MTN there before I bought it in Nigeria. So I'm very, very bullish on that stock. Very, very bullish, yeah.
Hey, Kanu, can I put a couple of links up in the nest?
Yes, you can. Go for it. If you can.
About the digital asset space.
Yeah, plug it on the tweet feed so that everyone sees it. Then they just do a cut so everyone sees what you're talking about. Seeing that works. All right, so I've got is that Chidubem? Chidubem, is that you? Hey, what's up?
Yeah, I'm good. Good evening, ladies and gentlemen. I want to ask some questions. I know Amazon is doing their split on the 6th of June.
Big split, bro. Big split.
Yeah, and the Alphabet on July 15th.
Mm-hmm.
So, what do you think? Are they worth buying after the split?
Okay, let's explain what we mean by split so everyone is following. When a company does a split, in Nigeria we call it, say, bonus shares. So we call it in Nigeria bonus shares. In America they call it stock split. It doesn't really do anything. There's no change whatsoever. What happens is this: your stock price is $1,000, so it's very, very expensive. People can't buy it because it's 1,000. So you can do a stock split and say you're doing a 1-for-1. So for every one share I have, you give me one new share. That means you are going to have 2 shares. But when you have those 2 shares, the price will come from 1,000 to 500. So you still have 1,000, but you have 2 shares. Before you had 1,000, but you had 1 share. So in terms of the theory, nothing should happen to the pricing. But in reality, what happens is that people are going to open their computers the next day and suddenly see that Amazon is down 1,000% or $1,000. And they won't understand why Amazon is down. They'll say, wow, this is a good bargain. So they quickly rush and buy. So normally, when you hear the stock split, even though theoretically nothing happens to the market cap, it does tend to push price action. So to answer your question, if you want to buy, you should have bought yesterday, because that's when the price action has happened. People have bought to take advantage of today's price action. I mean today, I mean since when the stock split was announced. So if you are buying after the split, you might be buying after the action has happened. You should have bought a long time ago. That's what I would say. I think you should buy shares based on the earnings and fundamentals. That's just my take, right? So you might be a bit late to that party. Doesn't mean it won't still pop, but you might just be a bit too late to that party.
Okay, I understand split and I understand why your explanation.
Just for other people, bro. Just for other people, yeah. Mm-hmm.
Okay. Why I'm asking is this, I know Amazon is going into pharmaceutical. So I have this debate, with friends and colleagues, that pharmaceutical could, push their price further higher after the split.
Yeah. I'm just saying that Amazon itself, right, makes a lot of money from their current business, data. That's where the growth is, data. As the world is moving into, this cloud-based services, everyone is going there, and Amazon is a big player there. That's where I think their real growth is. Even if they bring in pharmaceuticals, it's still going to be just pharma that they are offering, right? So it's still going to be their low-cost generics that are going to offer there. But I think the real growth is in the ASI and all the what's it called, the data networks. It's a big company, lots of scale. They've built a big moat. I would buy Amazon for my portfolio just to have it there, because you look around, who is their competition? You really can't see their competition. They are expanding in electronics, they're expanding in electric vehicles. They want to basically own the NFL football season. They basically they have a TV streaming service and everything. So long term, it's a good company to buy and hold. But right now, they have to maybe excite the market and give us something else to talk about. Singh, you want to jump in?
Yeah, I was going to say, people tend to look at price and they see Amazon at like 3,000 and they hesitate and they try to look for the next Amazon.
Mm-hmm.
And where can you get the next Amazon for $20?
Mm-hmm.
But just like there is no next Bitcoin, there is no next Amazon. And then there is the next Tesla is Tesla. So we should remember that, do not let the price affect you from buying into equities that are really generational, and they'll continue to give you good returns for the next 5 to 10 years. So you should buy companies like Amazon, Google, Tesla, and Bitcoin. I would put in the same category. And these are the safe investments that you just buy and hold. And then if you want to speculate, I would say, same thing. I think I like the 80-20 rule. 80% keep it in safe things, and if you want to speculate, you can do that with 20% of your allocation. But yeah, buy and hold is very powerful. And then I posted up in the nest for the readers. There's one report by Fidelity.
Mm-hmm.
They really understand the digital asset space really well.
I see that.
They've actually, that company they actually were Bitcoin mining in 2015.
Yeah.
So this report, you can open that, and it just talks about the digital assets. And then there's a report in there. I would highly encourage everyone to learn and read that report, because it really lays out the digital asset space well.
Yeah.
And then the second link that I put up there was the compound calculator. Everyone should have this. You can bookmark it. Like, just open that and then bookmark it. See what you expect your return to be, and put it in there for 10 years and see what you put in now and what it will be in 10 years.
I'm going to use that.
Buying and selling.
I'm going to use that. But just to answer Chidim's specific question. So what you're saying, Singh, is that the price itself might not be material if we look at the future earnings from what it's going to add. Like he's saying, they're going to add pharmaceuticals. I agree with him. The data networks are also good. I agree with him. So we should focus on the company's future.
Yeah, and usually the stock split shouldn't have an effect, but given the psychology of humans, when the split happens, more people will end up buying, and then it'll come up to the valuation that it should be.
Exactly.
It's probably undervalued. All the companies that are going to split, I would say they're undervalued because people are hesitant to buy them at that high price. So I think when the companies want to capture the real value, that's when they split, and they expect long-term growth. And they see their long-term potential, that's when they decide to split. So those companies that are deciding to split, they know they have a good target for the next year.
You're very correct. And Chidimem, like, just to buttress Singh's point, GameStop, I call that company a quote-unquote zombie company. Their stock price is up last week, up big time, because they've announced a split, right? Although their chairman is buying, but based on just that split announcement, the stock price is up. So you are onto something. It's just how much of the price is going to move up, I really don't know. But I think you're onto something in terms of buying the stock because of the split, and of course Amazon and all that.
Again, GameStop, I would put in the speculative 20%. Though,
Yeah, GameStop, it doesn't want to die. I mean, they've been saved, and kudos to them. But I think, did they buy a gold mine or so 2 weeks ago? Was that them? GameStop that bought a gold mine, or was that the other guy? So I don't know what's going on there. I think it's a very, very risky company. Let's see what's going to happen. It keeps on going up, keeps on coming down. If you're trying to trade, that's the place you should be in, and you can make a few bucks there. All right, again, go for it.
Please,
This is my opinion. This company, Uber
Uber.
had a fantastic business model for me. But do you have an idea why that company is not, living to its potentials?
I think it's just a lot of things. First, the main answer is for you is expenses, cost of running Uber. Uber is always going to run at a loss until they get scale. Once they get scale, new costs come. They have to pay their drivers more. Look at the largest market, California. They now have to classify their drivers, right, as employees, which means they have to pay healthcare, right? If you're paying healthcare, that's costs leaving, your own bottom line towards the drivers. It's supposed to be a gig economy, but now they are classifying them as a company. That's extra cost. Then look at competition. What's their biggest competition? It's Uber and what's it? I think, oh geez. Sing, what's the name of that Uber's competition? The other company with the red Lyft. Yeah, I mean, Lyft was a baby when Uber was growing, and they didn't buy it or kill it. And now Lyft has really just come in there and is very, very big on them. Uber made a lot of missteps. Their former CEO was pretty good in creating the bots. He was like a quote-unquote Elon Musk, right? But I think he lost the plot somewhere and he allowed competition in. So that scale has been reduced. They haven't Amazoned that system. So that's why they still have lower cost. I can pull up some numbers and share with you. Sing, do you want to add anything?
Yeah, so this is where you see that, there is things coming up that is going to give extensive competition to Uber. If Tesla is able to solve the autonomous driving, then that actually puts the whole Uber system in a tailspin, because their biggest cost is the driver themselves for the company.
Yeah.
The cost of the driver. So if Tesla solves the autonomous driving problem, that actually puts Uber out of business. And I don't think Uber is developing the autonomous driving software anymore. I think
they tried to buy it. I think they hired a guy from Google, but then I think they sued the guy that he stole the software. So the guy couldn't develop it for Uber. Again, that was the story. They bought this guy to develop it for them. Then the company that he left sued, and he can't develop for Uber anymore. And looking at Uber's earnings, man, it's all lost. All the way back to 2019. Earnings per share are all negative. So really, they are still operating at a loss. I remember, like Amazon operated at a loss for years, but Amazon was building scale. And then once Amazon had scale, they were able to drop prices and become dominant. But you can't say the same for Uber. Uber might have the scale, right? But they're out of Asia. They were kicked out of Asia in some very, very good markets. So they don't have the scale in the US, but they haven't then dominated using that scale to reduce costs. And if they don't reduce costs, they don't then make income. That's really what I think is going on with Uber. Good idea, but implementation, I think, is a problem. Does that work for you, sir, children?
Yeah, that was for me. Do you know QQQ ETF?
Yeah, that's your Nasdaq, should we say, index fund, right? You like it? Children, are you still there? Yeah, QQQ is more or less like it's more like on the Nasdaq side, right? So you're buying QQQ, it's like you're buying VTI, but it's more or less on the Nasdaq side. Yeah, it's something you buy to capture that whole market spectrum, right? So if you're going to invest in the US, that's a good place for it to be in. Yeah. What questions did you have about QQQ?
I'm just asking how do you look at it?
Yeah, I mean, it tracks non-financial companies, right? And it's just, it's a number one rated, large cap growth fund, in America. It's Nasdaq, very liquid. So it's a play for the US market as well. If you also wanted to play the US market, you can do VTI or you can do QQQ. right? But because it's an index fund, you are buying that whole NASDAQ 100 index. So if you buy a QQQ, you are buying the top 100 stocks listed on the NASDAQ. That's essentially what you're buying. So it's a sector play. If you think tech is going to do well, then you want to buy QQQ, right? That's essentially what you're doing. So it's a sector play. I'm not buying an individual stock. It's a good place for you to do your dollar cost averaging, to get into the market at a cheaper rate, and of course, then keep on investing. That's what I'll say for it. It's not a bad stock. I mean, I love it. Yeah, I just buy VTI myself.
Yeah, that's not involved. I don't know.
Most of the guys in VTI are also in QQQ. I mean, Apple is going to be there, obviously. So, and the growth, if you want, I can post the growth for you from 2012 to 2021. The slope is cool. It's a nice sloping curve. They are beating the S&P market. I will post that in there for you right now, just for you to take a peek at, right?
Yeah, I will appreciate.
I will post it on the chat right here, and then you can see. Remember, it's a sector play. So if you're buying it, essentially you're buying it to say, hey, I want to play in that market. I think that market, that index is something I should be in. I mean, if you're an investor and you are not investing in the US FANGs, those high growth companies, then you might be missing out on something, right? You want to have at least some Apple or some Microsoft or some, some that in your portfolio. So yeah. So Singh, what's up? You want to say? You have a what's
Yeah,
that?
I was going to say the QQQ for Chudeno, it's a good play because they're all the tech companies.
Yeah.
And the tech companies can, produce. They develop software initially, so their initial cost is high, but they don't have any recurring cost ongoing. Versus general companies, they have a lot of products that they have to buy, and with high inflation rate, they have to reinvest a lot into their companies. But these tech companies, they don't have to do as much. So yeah, I do like VTI. I think I like QQQ a little bit better. And I think in the US, we should consider the real inflation rate is about 15%. So you need to try to target your portfolio should be beating that 15% or matching it just to keep your assets stable.
The thing now, Singh, is this, that even the QQQ is down. I mean, all tech is down. Amazon and Microsoft were up maybe last week, but Apple was up for like 2 weeks, but that was like a flash in the pan, maybe.
Yeah, and then I would say, whenever there's a downturn, QQQ will take a harder hit and it'll go down more.
Yeah.
But this is where, for all the investors, if you're in QQQ, you need to understand and hold it, because when the market recovers, these things will jump a lot higher than the average market. So don't get scared when you're in QQQ and it drops significantly in a downturn, because the return will be much faster.
I would say buy more when it goes down, right? I mean, you're buying America is so top heavy that you have the Apples and the top 5 companies that are really quoted are the ones generating the bulk of the returns. I mean, if you look at the European markets and the American markets, Europe has no Microsoft, Amazon, Facebook, which other company, Alphabet. They don't have those companies. America has. So that's the big advantage that America has over, say, Europe, right? So that's a big deal for you, that if you get into those stocks, you are basically riding that wave of those American tech stocks. And QQQ is a good way for you to play it. Yeah.
And Carlo, that is like a very underrated thing that you just said. When the stock goes down, you should be buying more. So if you understand what your investment is, if it drops, then you should actually consider it a sale and you should be putting more money in it. If you panic and sell, that means you actually did not understand your investment well. So yeah, that's a great point, that you should be buying more if it drops.
Yeah, I mean, that's what I do. I just set I personally have 2 portfolios. One is I buy ETFs that pay a dividend. So I buy VTI, I think I have BNQ, I have SPHD, the ones that pay a dividend, and I set them up on a weekly buy. They just buy. I don't look at the price, irrespective. It just buys. I'm building up my retirement base, right? So I want to get dividends. So I just buy it every month, irrespective of the price. Then I have another portfolio where I do my trading. So if I see a good stock moving up, I could get in, get out. But on that buy and hold, I only put dividend paying stocks in there. So I have no, for instance, Facebook in that buy and hold, right? Because it's a good stock, but doesn't pay me a dividend. I like dividend. Dividends are my, should we say, insurance policy. If the stock is falling, it pays me a dividend. So that's what personally I do. You can do yours on the way, but that's how I personally do it.
You shouldn't do Amazon.
Amazon, I have Amazon because I know that I have BTI or something like that, but I wouldn't buy it if it doesn't pay a dividend. This is just me. It's not advice, it's just me. I like dividends, no matter how small. I'm very young, in quotes. So what I'm trying to do is to transit from my active income to my passive income. So let's talk some financial planning, guys. When you are employed, you are earning active income, which means you go to work, you either get a salary as an employee or you pay yourself as the boss, but you're earning active income because you are employed. Your entire goal is to transit from active income to passive income. And passive income means that you are earning money even if you are not there. Your goal when you retire, what you want to aim for is that your passive income, which is the money you are making when you are not working, can pay your retirement, i.e., your non-discretionary expenses. So let me say it again. When your passive income can cover your necessary expenses, that's when you can retire. So every time you work, they give you a salary, you take a bit of your salary and you invest. You either buy a house or you buy shares or you invest in a business. You want to grow your passive income, correct? So that passive income is what you're going to then use to grow and meet those expenses. Once your passive income can pay your expenses, that's when you are financially stable. And that's what I'm trying to do with buying dividend. That's why I do it that way I do it. It's just my own way, right, guys? So you can do it your own way as well.
Yeah, that's great. Everyone should have like a financial game plan, like you just came up with yours, and then just stick to it. The more disciplined, the better.
Yeah.
And leave emotions out of investing. I think that's when we most hurt our portfolio, is when we bring emotions into it and panic sell. And so really understand your portfolio and your strategy well. That way you follow through.
Yeah, and also if you don't understand stuff, don't get into it. If you want to buy, like I tried to buy, so let me give you my worst trade last year, right? So I was looking at Johnson & Johnson to buy. Then I heard that the US did not give Johnson & Johnson approval for the last COVID shot. They weren't part of the Moderna and Pfizer. So in my mind, I was like, they're going to lose money because they are not going to be selling vaccines to the government, US government. So I quickly went and I did a short sale. I did a put on Johnson & Johnson. Unbeknownst to me, Johnson & Johnson's share of revenues from vaccines is not a lot. Johnson & Johnson is making more money selling painkillers for COVID in China than selling vaccines for COVID in America. So I didn't really look at it that way, right? So I just said, they've lost money and I'm going to do a short. And I shorted, then I went to the account and looked at it and I said, oh my God, I'm in so much trouble. So I tried to cover, it wasn't possible. And it was a naked short, right? I didn't cover my costs and all that. So I did lose some money, but good, it just taught me that experience that you have got to do your research before you get in. If a trade comes up, make sure you at least do some research. If I just simply open up their books and looked at where they were making their money from, is it from painkillers in China or from vaccines in America? That would have saved me some money, right? So just a learning for us all. We have to learn from our errors and our mistakes. Hey, Oladi, is that Deep Boss? Oladi Boss, how you doing, sir?
I'm fine.
Hey, great. Hey, you sound kind of. Are you a Chelsea fan? What's going on? Yeah. Let's get some spark. So I mean, how you doing, sir? You sound kind of down. Are you okay?
Yeah, I'm very good.
Excellent. How can I help, sir? What's up? Talk to us.
I'm just scrolling my Twitter now, and I saw you guys are running some online speaking. So
Yeah. Great. Yeah, we love you being here, right? Do you have any? Are you an investor? What are you buying for 2022? What's your be a good investment for 2022? What can you share?
I'm still looking at
You're still looking.
trader.
Excellent. Yeah, crypto trader. What are you buying? What pair are you buying right now?
I'm looking at Secret Network coin for now.
All right. Keep at it, bro. Keep at it, right? Keep pushing. Hustle going, you know. It's a brand new year. We want to make sure we make that bank, right? This year, right? Make that bank this year, right?
Yeah.
Great. Love you, bro. Love you. Take care, man. Olumide, I see you. How come you're not talking, Olumide? Yeah. So, let me see.
Hey, Kalu, I have to run, but great.
Hey, Singh. Yeah, thanks. Anytime, man. I appreciate you coming and dropping by. Anytime you can, just come in and see us.
Before you run, please, can I chip in something? Do you agree that the US stock is down now, and if anybody wanna get in, I think now is the time. Do you see potential for the Bitcoin?
Yeah, I would say most likely we are down. So if you wanted to enter the stock market, this would be a good opportunity. But maybe you can do like a staggered, maybe 70 to 80% what you want to invest it now. And there may be a downturn in the future because of the interest rates that they're gonna try to raise.
Right.
But I think the currency printing has to continue, so the stock market should continue to do well. And then, like Kalu said, if there's a downturn, you just buy more of the assets that you like.
Yeah.
So look for that opportunity. Yeah. And I would tell everyone, look at that digital asset report at the Nest. It's something that everyone should learn. And the beauty about this, I think, Kalu, you talk to a lot of people in the audience are in Africa. The one asset class that everyone has access to is Bitcoin. They can buy it anywhere they have internet connection and a phone. The stocks in the US might be tough for them to get into, but you can buy $1 worth of Bitcoin anywhere in the world. So this is such a great asset to have. And like I said, yeah, everyone should learn and then have a little bit in it.
Yeah, well said, Singh, well said. I mean, the point is to diversify your asset, diversify your geography, and hedge your risks. And if you just earn in one currency, you are taking a big risk. So if you're earning just Naira, buy dollar teamed or dollar paying stocks. That's a very, very good way. Buy crypto, stake your crypto. You don't have to trade if you're not a trader. Buy crypto, stake it, but just do something. Don't just be in one currency or one location. That's a lot of risk for you guys, right? Thanks, Singh. I appreciate you coming again. Yeah.
Thanks again. And then remember, everyone should remember, Bitcoin is sound money.
Okay, I got you.
Cryptos are startups, so make sure we don't confuse the two. Thank you.
Gotcha. Obi, you got the floor.
Hi, Kalu. Okay, just to add to what you were talking about earlier about passive income.
Yeah.
So I would share our own personal experience, and for the past few years we have been, of course, bullied on crypto. That's my husband and I.
Yeah.
And what we then did when, of course, with the ton of events from COVID last year and then even early this year, our disposable income has further shrunk because of inflation.
Correct. Yeah.
So we couldn't save or invest as much as we wanted to or how we used to. So what we then did was we moved some of our assets in crypto to stake, and then that gave us some staking rewards and helped us to build passive income. Now, what that passive income is doing for us is helping us to, of course, take care of our daily monthly expenses that we have to use to things.
So you guys are staking. Is that it? You guys basically?
Like we use what we wanted. Yeah, so we're staking, and then we're getting you get when you're staking your crypto. So that's for some assets, though.
Yeah.
Not all assets have that feature. So the assets that we have that have that feature, we stake them and then get passive income. So the staking rewards pile up, and at the end of the month we pull it out. So we have different that helps us to, of course, get passive income, and that's a way that I feel people we don't just buy crypto or buy assets for the sake of buying. Be deliberate about your investment choices.
Yeah.
Be deliberate about where you put your finances.
Yeah.
I know for the better part of the first quarter of this year, I pretty much stayed away. So what especially just before the Russia-Ukraine crisis started, I had put in some money for bonds, for equities, like investing in the US market.
Yeah.
However, post that, what I just did was now to put my money together, and then that further reduces the exposure for me to reduce it, at least help to hedge my funds, and then reduces that exposure that I would have if I was keeping my money in Naira. So at the end of the day, don't just leave your money in the bank, sitting doing nothing.
Gotcha.
And even if you must invest, I would support that people should invest in something that would be yielding dividends. Yes, great for you, because of course at the end of you get, no matter how small, it does accumulate to something.
I agree.
The goal is nothing today, but over time you will see that having what's in there is become something bigger in future for you. So don't just put it in investment and put it in. Yeah, that's it.
Gotcha. I mean, that's a good point, Obi. I mean, Crypto HD, I see you. We're going to put you up next. That's a good point you're making, right? Invest with a purpose, like invest for dividends or invest for capital appreciation, but just don't do nothing. Doing nothing is worse than actually investing, right? You have to be able to say, why are you holding this asset? Is it for income, or is it for appreciation, or is it to hedge your position, right? So that's what I would say. Try to invest with a purpose. Crypto HD, how are you doing?
Yeah, I'm doing good, man. I'm doing real good. It's
Hey.
been a great year.
I know, right?
You were talking about J&J.
Yeah, Johnson & Johnson.
I look at it differently than you.
Yeah.
I look at 2021, they had in revenue 14.71 profit.
I know.
14.7 billion. In 2022 so far, they have 20.88 billion. So you said about the pain pills going overseas. Now, anytime a drug company deals with a government, that payment that they get from that government is really delayed. It
Okay.
takes a long time to get there. Could be up to a year. So, because I was into like Pfizer too.
Nice.
I was playing Pfizer, and what I like to do is I like to buy low and sell high. I like the dips.
Don't we all?
I played the dips big time. This week I put a bunch of orders in for stocks.
Which stocks are you buying, sir? Which ones are you buying?
Well, I put an order in to buy General Electric at
GE.
$86.
Interesting. General Electric. Interesting.
General Electric at $86.01. Now this is just an order to buy. If it hits it, it does. If it don't, I don't care.
Yeah.
I was going to buy 580 shares of that. PayPal, I was going to buy 1,000
PayPal.
shares at $94.01. Now I just went in and out of PayPal and Square here about 3 weeks ago, and I made a killing on it in less than a week.
PayPal was down big time, I think, last month or so. I've been looking at it.
I know. I bought like Square. I bought it at I think it was $91 a share.
Yeah.
And I sold it for $135 in
Nice.
less than a week, or less than 3.5 weeks.
Nice.
But I've got an order to buy again at $85.01 for 2,352 shares. I got several different accounts. I'm buying Google if it gets down to 2,550 a share,
Yeah.
I want 60 shares of that AMD.
AMD.
See, now, my AMD has gone down close to what I want to get it at. I think it could go lower. It could go down into the 80s, possibly 70s.
Yeah.
I was going to buy it at 102 and 103 in two different accounts.
Yeah.
And I pulled my buys on those. I've been reading a lot of stuff here on recessions.
Mm-hmm.
And I don't know, I'm a little hanky. I'm waiting to see what happens in a week. They're talking about, I'm in the U.S., so.
I hear you. I mean, just to make the point, yeah, for J&J, you're completely correct. I went opposite. I sold. I was putting. I did a put on J&J, and it burnt me because J&J went up, and I lost. That's the point I was making.
Oh,
Yeah, I went opposite. I should have bought, not sold. Yeah.
Are you in the U.S.?
Currently.
Okay, I trade through Fidelity Pro.
Yeah.
Pro trading platform. And I've got all the bells and whistles to do research and everything on there.
Yeah.
But I use Yahoo Finance for a lot of my stuff.
Same here. I mean, I use Yahoo Finance.
All day long.
Yeah, it's right there. You get everything. For FinViz, I use my screener. I can see short orders and all that kind of stuff. So I can tell if a stock is trending red or trending green. For me, I see where you're going with AMD, with Google and PayPal. I think you're buying the other side, the underrated companies, buying them at low, waiting for them to pick back up and sell. That's a great strategy. I wish I could do it as consistently as you. Just buy when it's down, a good company with momentum, and then of course exit once it gets up.
I look for the patterns. I try to get back in the patterns.
What's your trigger? What's your trigger to buy? What do you look at the trigger to buy? Is it just price action, or do you look at what triggers you to buy?
I look at the 6 months, a year low. I'll go a little bit above that. I'll look for a pattern. If it's been like 2 or 3 times again, I'll go up to there if there's bad news. But here's another thing I do. I type all my stocks in the Excel program and I rate them 1 to 5, 5 being the ones I feel are most profitable. A 5 I will put the most money into. And I put a trigger dollar amount on there. So if it gets near to the low, then I would buy it. I program those triggers into alerts and I put them in through my Fidelity Pro.
Yeah.
So I'll get a text on my phone immediately once a stock hits a certain price. And then I'll look at it and reevaluate it. I've got hundreds of stocks in that.
On that watch list. And really, what you're explaining is not really hard to do, even if you don't have Fidelity. All you are basically saying is you can create an Excel sheet, or if you have an app, just put a watch list on that app and then put your price trigger, the price that you want to be alerted. The system will track it for you and send you a notification saying this stock has fallen below or is at your target price. What do you want to do? Then you can then pull that trigger. I think it's a great way. Exactly. You can do it on Excel. You can put an Excel and update the Excel. It will also send you a mail and say, hey, this particular cell has reached this, and then you can then buy. I like it. I hope people are listening. Investing is all about having a strategy and repeating that what works for you over and over. Don't follow, get what works for you, just repeat it, get better at recognizing your triggers. And like you said, you're doing those price patterns and all. Right. What else do you want to share with us, sir? Just for us to, what else can we take from you?
Just that.
Nice.
You look at like Pfizer. I'm looking at Pfizer right now. It's had some valleys of like $42, and it goes from 42 up to 58. When it gets up like that and it levels off, that's when I'll take and sell.
Nice.
And then program the next trigger in there, whatever low price I want to, and I'll just forget about it until I get a text out to my phone.
That's the key point you just said. Forget about it. Don't fidget. Don't look at the market. Set your target, set your strategy, and simply wait.
Well, see, I target maybe 400 to 500 stocks. Ones that I think are doing decent, ones that have revenue coming in. And I can't follow all of those every day.
True.
I got a life on the side. But I mean, I see people pushing some of these stocks that have negative earnings. I mean, they lose half of what they gain. Every year they're losing money, and people actually are buying them.
Let me take you up on that. I think that's a new thing now we're seeing in America, right? Where you have zombie stocks, but the price still goes up. And if you remember Hertz, do you remember Hertz? I think it was last year. Hertz declared bankruptcy, and folks were still buying, and the company was still trying to sell, and still it was still going up in price. So is this Wall Street bet, this momentum play that we're seeing, where fundamentals seem not to matter anymore? Look at GameStop; it's going up on a stock split announcement.
Well, we got AMC and we got GameStop.
There you go. That's the one. Yeah.
But it's all the hype.
It's hype.
All these people think they can get in on it.
True.
It's just crazy. It's wrong.
True. I say it. I mean,
followers are ready to kill each other if they sell a share.
Diamond Hands. It's called Diamond Hands.
Yeah.
I hear you, sir. Thanks for dropping in. Please check us again. We're always here on a Saturday. This is 12 Pacific time. If you ever want to drop in, I'll follow you. Give me a follow. So I appreciate you just dropping and just saying hello to us.
All right, boom. Thank you.
You're very, very welcome. Hey, Olumide, let me have you on mute and come in and say something. You've been too quiet.
Yeah, I just want to be impressive.
Oh, yeah. Yeah, very interesting.
So I think personally, just like you rightly said, I think one of the major advice for a lot of listeners is that successful investing is usually personalized, So for me, for example, I think my own strategy, ever since I joined financial market journalism, because I trade actively, just like you do, because of my job, I can't really trade as much as I do. So I buy good assets that are having bad times. So I'll give an example. I came into Robinhood some months back when they were having certain issues with their app, and the price went almost as low as $9, and I increased some amount of positions. I think it's about $13 right now. I also brought it to Credit Suisse, the scandal, because I noticed the fact that interest rate era would definitely change. But still, at some point, banks would start making more money from interest income. So I bet on the hawkish narrative. So I was looking for banks that were fairly cheap. So Credit Suisse, Deutsche Bank were my top picks. The American banks, I was a bit late, so I couldn't make certain positions. Then I think in the crypto market, despite the fact that I'm actively involved, I reduced my position by 80% in 2020, by the end of 2021. And where I put my assets by ICOs, I look for assets that have promising future the next 3 or 5 years. So I put long bets on those ones. Then pretty much on centralized exchange, very little. But I think basically where most of my funds are doing right now is the debt market. I'm trying to look at having consistent income. So I'm saving in those markets. And basically also the Nigerian stock market interestingly give you some decent returns, particularly Wema Guinness, and I've been in that Wema for a very long time because Wema has this cyclic characteristic that by the time it gets to 60 to 80 kobo, it drops back to certain levels. But at this point, I think not of much it really did the market well. So we bet on their feedback app. I think it's really pushing the momentum.
Yeah.
Basically, I think one of the things I would just say here is that there's no definite law in investing. You just have to be consistent, just like you said, and you have to stick to your plan and objective. I am losing trades, I am losing positions to GT goes number 1, but I increase my position in Uber. And I feel that the shares because of non-interest income and the fact that they're pretty innovative to the fintech ecosystem. Maybe that's why a lot of investors are punishing them. But I feel that the stock is going to really do well in the long term. So I increase some positions in those ones. And Chapter is not doing too well.
You're buying Japol? I wouldn't touch that. I wouldn't touch that company with a 10-foot pole.
Yeah, but it has we don't really have so much options like what you have over there in the United States. So the good exposures, what really attracted me to. But the stock, pretty much like Red said, is very volatile. So sometimes you really get in some. But I think I really got one because it's really trading near record low. So
let me throw this at you, right? Guinness is up 82% in Nigeria. PZ is up, I think, 72% in Nigeria. Presco is up 51%, right? These are all like food companies and all those kind of sell food and fast consumer goods. Is that sector back? We hear Nigerian consumers don't have spending power, but just seeing Guinness. I mean, Guinness is why is Guinness up 82%? What happened? Why is Nigerian breweries up as well?
For brewery stocks, impressively, for brewery stocks, I think the beating was exaggerated. If you look at from 2020 to early 2021, they gave a bearish outlook because COVID really disrupted the business. So investors really pushed the stock to almost record. At one point, Guinness was trading at almost 15 naira. So pretty much was a no-brainer for me. I bought so much Guinness positions, and I think long run we're not surprised at such upside. But for stocks, it's interesting. Some people say that the stimulus money by CBN and the fact that there was so much liquidity in the markets really spurred a lot of these companies to put their bottom line. But for me, I don't really see any direct. I can't really pinpoint directly that what the benchmarks are making these stocks, right? So I'm not so exposed, but certainly PZ was an interesting stock. I think as probably I saw it as something to buy, but it's not a stock I like to keep for too long. Also, MTN is really at the all-time high. MTN is really at the all-time high right now, and interestingly, it's really been gathering momentum. People are betting at the fact that it's really turning to more like a tech company or telco. And the fact that it's declared 8.75 dividend.
That's not bad, right? That's not bad. I mean, and again, sometimes I noticed, there's something else, sorry to cut, sometimes I noticed here, when the Nigerian stocks go up in price, they go up in price 100, 150, 120, 50. The lowest guy in the top 10 is about 46% up in price, i.e. year to date. But when they go down in price, right, the largest decrease, which was Regal Insurance, is just 33%. Then you have Carleton, 31%. What's going on? Why do the stocks tend to go higher with a higher percentage? But when they fall, they really don't fall that much. Is there anything you should pick from that?
Yeah, I think one of the key things we need to look at is that the specifics on the NX, for particular stock 10% or 10% down, really helps with some support, Then, also the fact that we are seeing a lot of Nigerian local participation in the Nigerian stock market, because usually foreign portfolio investors at some point when they want to exit, they exit in mass, and we see big drawdowns. Some drawdowns are not coming to play again, so that's another reason. Then another key reason is that liquidity is not like what we are seeing at those times. So it's very difficult for stocks to suffer such falls, and that's really what's helping Bitcoin presently. If you look at Bitcoin right now, Bitcoin decided to go lower than what it is, but liquidity has somehow dried. So we're not seeing that selling pressure like what we have seen in 2021.
Yeah, I mean, Bitcoin is starting to move away from the stocks. I'm surprised that Bitcoin is actually moving with stocks. When stocks go down, Bitcoin goes down. They always say Bitcoin is digital gold, but I don't see that. Gold is going up, Bitcoin is coming down.
Yeah, you're right. I also don't see it as digital gold because investors look at Bitcoin more like a gold stock. And just like you said, the correlation is really answers it all.
Yeah.
I think if you look at Bitcoin, if you look at adoption, Luna Foundation has spent about $3 billion buying that asset. So that's really what made that support. And Michael Saylor is still aggressive on the most valuable crypto asset. So I think that's why Bitcoin is somewhat detached from the crypto market.
Yeah.
Because, it's on that news when US Fed increases their interest rate by 50 basis points. I don't think the crypto market can survive that. And when the Fed start reducing their balance sheet, when it started tightening, Then look at regulation. Look at what happened in Europe, for example,
Yeah.
where the specifics of non-custody wallet and the anti-money laundering requirements that weighed on Bitcoin. At some point, we were thinking Bitcoin will break back above $50,000, but that news brought Bitcoin to almost as low as 44,000, oscillating back to 46. So I think it's interesting time to.
So Lumide, I'm putting you on the spot. Where is Bitcoin going to this week? Is it going to go down because of this Euro news, or should we see it break that 48,000 and then start to go up? Where do you think Bitcoin is going to go to this week?
To be honest with you, I think it was late between the 40 to 45. So I don't see it breaking above 48,000, except we see big news from adoption. Plus, one of the tricky things about the crypto markets is that adoption is increasing day by day.
Correct. Yeah.
Payment Jam, for example, it just announced the fact that they'll be teaching businesses NFTs. So we look at that upside, So maybe an exciting news this week would trigger that, but based on present fundamentals, it's quite difficult for Bitcoin to break above where it is right now.
Gotcha. I mean, good call. I mean, I see this Russia-Ukraine issue as really helping the Bitcoin and crypto space. I mean, they will have the Russian speaker essentially saying that they would accept Bitcoin as payment for Russian gas. I mean, I know they might not, but him just saying it alone is going to remove lots of, quotes. And people will say, yes, now if a sovereign can accept Bitcoin, that is, we're going there. The central bank-backed assets, China, India, are working together to form this new currency, SWIFT, swap exchange network, and all that. And of course, there's going to be lots of, people diversifying from the dollar hold. These are sovereigns I'm talking about, they're not individuals. Sovereigns are going to say, well, let's have some crypto in our balance sheet, or let's have some digital quote unquote in our balance sheet. So I think it's just use cases growing for that sector. That's just what I think, which is all positive for them.
Yeah, you're right. Very true. And that's why it's very tricky for regulators to just. I think that's the right thing the United States are doing. They are rather studying the market than banning, and adoption is really increasing because day by day. But I don't see Bitcoin becoming more like a payment to the future. First, for many reasons, I think it will end up becoming more like a commodity or like the digital good, so to be for storing up information rather than making transaction.
Okay.
Because if you look at the windows that are coming out, it's very difficult for this accessories for payments.
Nice. The last question, I promise, right? There's a guy asking me on my DMs, asking me about Jumia. So he bought Jumia at about $6. He put in another $10. What's your take on Jumia?
Very tricky. That's a very tricky question.
That's what I'm asking you now. I don't want to answer. That's what I'm asking you.
Yeah, but I think the stock for me, I think it's been beaten, but it has little upsides. To be honest with you, the fundamentals don't really look so good.
Yeah.
They've not really been able to break in like one of the experience. Look at the likes of Konga that's gone on that.
Yeah.
So I think while we're spoiling the fact that the Nigerian digital economy is really, then the margins, they're not really able to push margins.
There you go.
Yeah,
now you're talking.
Diversify other things and try to create one going to something like, but everything that has stuff to tell about. So I don't see that stuff, to be honest, to break it up.
I mean, let me just give my point. I think he's listening. I think he's listening, right? So for me, Jumia, Konga, they are all local Amazons, right? They want to duplicate the same model for Amazon. So in America, what does Amazon do? Amazon makes a profit, Amazon makes sales. They make revenues, then they make operating profit. But they take that profit immediately and they buy a new warehouse or they buy new distribution facilities. So they don't make any net profit. They don't pay any taxes. They can buy, they can rent. They are building their own transport infrastructure. They have their own airplanes, their own trucks and all that, right? Distribution centers.
And they also have a very profitable division, the cloud.
Thank you.
The cloud, yeah.
Good point. So they are able to leverage as a group cash flow You know, Amazon just borrowed, I think during the pandemic, Amazon borrowed the lowest interest payable for any company in the United States. Like, I mean, they were borrowing for 30 years at less than 3% for 30 years. Now rates are going to go up to 7 or 4 or whatever, but they are locked in for 30 years. So if you want to duplicate Amazon in Nigeria, you need to be able to scale at a lower cost. But for Konga and Jumia, what they are doing, that they are scaling at a higher cost. What I mean is that the Naira is losing value. PMS is more expensive. Infrastructure is not being built. So if a Jumia today wants to buy a new warehouse in Aba, it's buying at a higher Naira price. It has to build its own security, its own water. It has to deal with higher interest rates, right? So that scale is not now the same as an Amazon scale, which is then reflected, like you said, in the margins. So the margins for Konga, for Jumia, are really, really going to be tight in that they have to deal with the local cost of doing business. Sadly, guys, it is cheaper to import to Nigeria than to manufacture in Nigeria. And if you can't change that, then Jumia and Konga are really, really going to be in trouble. Okay, imagine you're a Jumia, you have a motorcycle and you have to deliver, say, my book. So let's say I'm going to plug my book. You buy my book and you want to deliver. Right now in America, I can sell my book at $0. Amazon delivers those books at no cost to me. When you buy on Amazon, you get the book to you. But in Nigeria, Jumia has got to buy petrol, PMS, imported PMS at a higher price. It's got to pay, say, quote unquote, Lagos fees for the Okada. It's got to pay land use charge. It's got to pay all these charges before it can make a profit. How much is my book that's going to make a profit? So you then see that those margins are under attack. And because they're under attack, long term, I am not sure, unless we see margins fall. When I mean margins now, the cost of production in Nigeria has got to come down for a logistics company in Nigeria to make money. So I'm not too bullish on Jumia. So I would rather go for something simple, right? Go for something that you are sure is going to make money. I mean, oil and gas is going to make money. There's Seplat. Go for that you're sure that you can buy and then keep on making money. So to answer your question, again, I sent me this tweet about Jumia. I would say if you've made money, maybe you might want to exit. Try to buy something you are sure of. Dangote Cement is right there, right? They make tons of money. So you can basically get into Dangote Cement, get into maybe banking, get into oil and gas in Nigeria, right? Fast consumer goods, buy those stocks, and then you can do your dollar cost averaging. How do you sell up your stock? I don't know the app you are using, but you can, I think, click a button and you can say sell, and then click that withdraw from your portfolio, and you can withdraw. If you have a problem, just I see you on the DM. When we're done, then let's talk on DM and I can walk you through this. I don't know the app this is, but I'll walk you through it, right? Excellent. Hey, Lumide, don't go anywhere, man. Stay right there. Temitope, thanks for waiting, right? Kindly unmute and then come up. Emmanuel, I've added you as well. But Temitope, sorry, go ahead, sir. What's up with you? Where are you investing your money?
Okay, good evening, everyone. Can you hear me?
Yes.
Sure.
I can hear you. Go for it.
Okay, wonderful. Okay, thank you very much. I think I'll take you back to the stocks part, especially the US stocks.
Uh-huh.
And I'd like to hear your opinion on this. What do you think about price performance in looking at how well a stock will do? Let's just use the word historical performance.
Yeah.
At the end of the day, the two things that really, really will make money for you on stock investment is price appreciation and dividend payment. Every other thing is
True.
towards looking at how you make those two.
True.
And somehow historical performance is, to an extent, should be a predictor of, to an extent, future performance.
Okay.
Not necessarily true, but
I hear you.
I think that might be the value investing idea, but I think it applies to most things that it has been doing well in the past, it should be doing well. But particularly the price performance. And I'm saying this because, let me give an example now. Tesla, maybe like, let's even use the Amazon that if I bought in 1998 or something,
probably having millions of dollars. And why is that? I mean, it's not just because I don't think even pays dividend. Now, can I not pay dividend as you're doing back? So it's because of the price appreciation. That's basically why you would have need lots of money.
Yeah.
And so if you're looking at those kind of stocks and you're looking at the 10-year performance, particularly the price performances, the 10-year, 5-year, 1 year, 3 months, 1 month, 1 week, and look at the trend of how they performed, like instead of picking even just the graph, looking at particular points in time. How did you do 1 year? You got to do 2 years, you got to do 5 years ago, how did you do last week?
Yeah, I think it's a great question. I hear you. It's a great question you're asking, right? So you are entering my realm, right? So this is personal finance and of course stock trading. Let me give you the language that we use, right? So because you are buying a stock, and a stock is what we call variable income. That means you are not guaranteed any profit or any return. It's not a bond. A bond is fixed income, which means once you buy a bond, you are going to get a fixed income. With stocks, right, you could make money or you could lose money at the drop of a hat. I'll give you an example. If we say Delta Airlines, great company, flies international, the world is booming, Delta is flying all over the world. You look at the past 5 results for Delta, you say every summer, Delta makes more money because people travel for summer, to go for holidays, so you want to buy in the big start of summer in the US. Of course, then COVID comes. Because COVID comes, it doesn't happen, so you lose your money. It's because of that the stock guys will always tell you past performance is not a guarantee of future performance. You and I know that if a company is doing pretty well for the last 25 years, look at Coca-Cola, look at Warren Buffett companies, look at, say, Amazon. We know that if the company is doing well, that gives us prologue, right? It gives us prologue, but it can't give us a conclusion. We have to look at that prologue as data. We can't recommend based on the past. But fundamental analysis, right, tells us to look at the past and then project into the future. So if you ask me to analyze a company for you, I have to go to the past, but I can't, because of the past, tell you to invest. That's the way I would answer that. So I would say you cannot buy any stock without looking at the past performance. The PE is a lagging indicator, right? The shares, earnings per share, return on asset, they are all lagging, which means they've already happened. So you have to look at those. But you can't then use those, right? And then say, I'm going to buy. But you have to, right? So it's I'm telling you yes, and I'm telling you no. Professionally, you can't say that, right? But if I was buying shares, I'd always look at the past, and I see what is done in the past. When I post charts, you see me do 5 years, I'll give you here's what's done in the last 5 years. That's what I would say, right? But remember this, what does a share price mean? If a share price is $100, what does it mean? It means that the profits, the earnings of that company into the future, if I discount them back to today, I get $100, which means that I'm looking forward when I buy shares, not backwards. I use the back to tell me what's happening, but the price today is based on the future, not the past. So I'm giving you 2 answers to give you the theoretical and the operational. You're not going to get a definite answer. So I never buy stocks without looking at the past. I'm giving you how I did my mistake where I sold my Johnson & Johnson because I didn't look at the numbers. You see, I looked at the future and I was wrong. So you have to look at it that way.
Yeah, sure.
I think it's a great question you've asked. Yeah, so look at it that way. Yeah.
Okay. I seem to have maybe 1 or 2 other questions. I hope that's fine.
Oh yeah, go for it. Emmanuel, I have you next. I'll take after Tunde, I'll take Emmanuel. Yeah, Tope, go ahead.
Okay, so thank you for that answer. I think you actually sums it up. But like you said also, we can't actually predict the future also. So I mean, like you said, it's stock. There's no fixed return you get on that. I'm also speaking because I also had some bit of an example also. I bought Snap during I think the COVID time.
Yeah.
And I think I made like maybe 50% interest on that.
Yeah.
But I didn't say it because I'm more of a long-term
investors. I don't think I'll put any stock. So okay, apart from the Chinese time when Alibaba was having China. So
Yeah.
but I'm always the long-term outlook.
I hear you. Topper, is still there? Topper, if you're hearing, I can hear you again, but you are talking about Snap, right? So not just Snap, right? Let's talk about pandemic stocks. If you are buying a pandemic stock, you are buying it because of the pandemic. So the pandemic boosted earnings, boosted sales, boosted their returns. Right now, there's no more pandemic, right? Which means that the reasons why the revenues were going up is no longer present. So I would say even if you're a long, you might want to take the profit, the pandemic, those pandemic earnings. So what I'm saying is this: if you bought Zoom before the pandemic, maybe you bought it at 50, Zoom would have gone 100. I would advise you take that profit, the pandemic profit, off the Zoom stock, then again at the price without those earnings that were extraordinary. I see you reconnecting. When you reconnect, I will ask you to speak, but I'm going to ask Emmanuel.
Like formats that are like so pretty much I think might not be smart to join the train right now. So you look at the stuff that is pretty much the value, and how do you get to look at those stocks? So first of all, look at the stock that I won't call the name that usually was the most was among the most profitable, but really didn't bring in so much profit and still has one of the valuable market cap in Nigeria. So
wow, the what company is that? Okay, DM me and I'll call the name because you are giving us DM me and I'll call the name for the people.
Okay, let me just mention it's Orange Bank.
Okay, you're talking of Guarantee Trust Bank or GT Bank Holdings, right?
Yeah, exactly.
Yeah.
So that's one that someone should look at for.
Okay.
Because right now the stock is really trading it's too good. So that should be one. Then another thing is that look at stock right now. Industrials and telcos are really quite expensive. And if you look at relationship to the markets run. So except you are willing to suffer drawdowns, then pretty much you wait. And just like Ricardo had rightly said, the timing of the market also is very important. March usually is a month where the stock market usually suffer downturn, so we must have picked position at that point. Then as we rally through towards the mid-month, we expect some correction. So look at the size stocks that you can really take in positions. For me, I think insurance are kind of very spiky. They don't move. They give you what I call mixed bag.
Those insurance stocks, man. Those things are like principalities, right? They are penny stocks. You can buy them and make 1,000%, but they just sit there doing nothing.
Exactly. So that's why I said I should also look at the exposure. So, but the most important thing is that the capital you're putting really matters, the objective and the time horizon, really the ability to withstand risk. Because trust me, these things they're not straightforward, they're not rocket science as swings. So the ability to be able to withstand this pressure really determine your success. But relatively, buying value stocks at discount prices will definitely give you some upsides.
Thanks, Olivia. I appreciate that. So I think TMD, you've gotten tons of information there, right? So yeah.
I'm satisfied.
Great. So someone is asking me a question about commodities, right? He wants to buy futures, he wants to buy forwards. For me, commodities are a mixed bag. You have the energy commodities, right? Your crude oil and all that. So in Nigeria, it's not really a commodity, it's more of the retail marketing. It's not like the commodity of, say, you're buying USO, which is like an ETF for crude oil. So it's easier, in my view, to trade commodities on those foreign apps, right? So you can buy USO or you can buy XOM, which are tracking oil company stocks or even crude oil prices. For Nigerian commodities, there's Afex. I'm trying to get the link and post for you guys. So Afex is tracking more of food commodities.
Nigeria.com.
Affects Nigeria. No worries. I'm going to try to get it out and post as well, right? Thanks, TMD. So,
Yeah, the poster is in Abuja.
Abuja.
I love the company, but yes.
Yeah, I'm going to post the link here. Yeah. They do trade. Apex does trade. So if you want to buy, say, cocoa or paddy rice and the rest, you can get in and trade.
Islamic did another things. They trade both soya beans, cashew nuts.
Nice. I'm just trying to get the link. Okay, I have Apex here. I'm going to try to post it up for folks that want to trade. So if you want to buy all that kind of stuff, yeah, you can go in and basically get trade on those commodities there. That's mostly food sector. If you want to do more of, say, gold, there's Barron's Gold, there's GLD, there's USO. Those are also commodities that you can buy directly. The commodities that are up in the world right now are all linked to Russia, Ukraine. Gold, wheat, palladium, all that kind of stuff. So if you see, you can say maybe you want to buy it, and if there's peace, it's going to fall. But right now, with uncertainty, it's also going to go up. So if you're buying commodities, you want to make sure you want to see if you're buying those commodities that are exposed to the uncertainty of Russia and Ukraine. Ifeanyi, what's up? How are you doing today, sir?
Yes, sorry.
Go ahead. Who was speaking?
Yeah, no, sorry.
Hold on.
Yeah, just wanted to drop 1 minute of what you were saying.
Please go ahead.
I think rightly people to also to understand that commodities, just like you rightly said, they are mixed bags, they are very volatile. And if you look at the most profitable traders in that sector, they often have both physical and the deeper exposure. So look at the likes of Twitter, Mercura, Trafalgar. So the market is very volatile, and commodities, the margin requirements sometimes really put a lot of traders. So it's not really suitable for retail investors or investors that don't really have substantial amount of capital. You need to understand that, and the market has really brought a lot of traders on that category. So I just wanted to highlight that. Thank you.
Thanks, Olumide. I have to bring those guys to this floor. This Apex folks have to come to this space and just explain to Nigerians how to buy paddy rice and cashew. I mean, if you're listening, reach out to me. I see it all the time. People always ask me. Yeah,
they have at least close to about 80 different varieties of commodity they trade.
I see maize, I see soybeans, I see cocoa, I see gold. They have gold? Jeez, let me click on gold and see what they have right there.
Both ginger, both garlic, and they have over 80 warehouses scattered across Nigeria. Their major head office, the major head office is I think Bonu House, close to Ministry of Finance, the Secretariat area.
Okay.
They have an office in Lagos as well.
Okay, I've shared the link, folks. So their link is up there, Afex. I mean, if you want to do commodities trading, I saw their last investment note, and they were saying fertilizer prices and wheat prices are going to go up because of the Russia stuff. So that might be, in case someone is interested in that might be a place to look at. I don't do commodities that much in food. I mostly try to buy as a hedge or to see if I see something, but it's not my play. Ifeanyi, what's happening? How's the weekend going?
We thank God. There's God to give credence to what Olumide said.
Yeah.
As regards commodity, it's a field that you need enough capital. You can't play on that field without having enough capital.
How much capital is enough for me to play? How much?
Okay. Let me just give a little insight of what I know. Majorly on the food stuff as related to affects.
Mm-hmm.
Like an individual now, you want to make have where to store, that's another thing. Apart from the logistics, you have a warehouse, and when it's time to sell, to make your profit. Mm-hmm. So like little I know, this period presently, March, April is always cashew, palm oil. Then December, January, first week of December, it's always beans, So I'm sourcing those beans, you get them from Gombe. And Gombe is a place you could get beans even though you want 80 drugs.
Even now, with all that stuff happening.
Yeah, people still go to Gombe. My contacts are in Kaduna. So they get those things, they get it from Gombe, they source them. But for cashew nut is within the location of Nasarawa, Benue, Enugu, Kogi, those areas. So like beans, November, December, January, it sells for 34, 33, 35. Then when it's by June, July, you sell for 90, 100. But the price varies.
So I can buy, store and then resell and make a margin. That's a good trade.
Yeah, you could buy, store and resell. So those are just some of the things you could do.
I wish there was someone I could give my money to that knew this business, because I'm not going to Gombe, right?
So
we
can talk offline. We could talk offline later. Maybe
okay.
We'll talk better.
Twitter just kicked me off my own Twitter Spaces. I just had to log back in again. So maybe they're giving us a warning. We've been here for about 2 hours and 15 minutes. So yeah, let's keep talking and then let's see.
So those are some of the things there. But the market varies because one, if you are to buy a store in the north, I always advise, because people always say, trust, I want to see my goods. But it depends on the person you are dealing with. If you buy from the north, instead of going through the stress of bringing the logistics to Lagos, where they have the market, taking it to the east, it's better you store them at a reduced cost and reduce the stress of bringing them, taking it far. So you store them in the north. So when it's time to sell, the price varies maybe within the difference of 10,000 naira or thereabout. Because if it sells in Lagos, maybe because last 2 years the bag of beans sold 110,000 in Lagos. So then if it sells in Lagos with such amount, the difference in the north might just 10,000 or 15,000 naira difference. So people pay your money off. But Lagos is a problem with the market because I've been to my 12. So I've done survey and sample. Some of them will tell you that when you bring such goods to Lagos, that you might not be lucky to get your money complete. I asked some of them, they said the challenge is that if you bring 500 bags, some will come and pay you for 400 bags. Another person will come and pay for 300 for 50 bags, and they will tell you, okay, give me the remaining money, get it next week. And before you know it, you keep having issues. So why don't you sell where you get somebody who pay you bulk or pay you off and take everything?
Well, let me ask you a question.
Those are
So just a question. So you say this is a good way to invest, say, commodities in Nigeria. I mean, what's the return on, say, does it beat inflation? Is it something I can do? Is it like?
It's something. Let me give you an instance. I've told you because when you look at the margin of profit compared with the time of storage, 4-5 months, and you sell, it's good. But you factor all the other things. From the market you buy in Gombe, offloading and loading is 200 naira. Loading from the market and offloading at where you store is 100, which is 200 per bag. Then you buy each bag, I think 1.5 or thereabouts. So times maybe 500 bags. You know the outcome.
Yeah, that's good.
After that,
no, go ahead.
After that, you make arrangement for where you store.
Yeah.
So you have to pay. Maybe it depends. It's negotiable. Maybe a bag can go for, because depending on if you are keeping for 5 months, depending on when you are keeping, they charge you less. Be 2,000, 2,500.
Interesting.
If the volume is higher, the prices reduces.
Yeah.
The price of storage, the price you pay for storage reduces. So those are some of the things you pay. Then maybe after the storage, maybe after 4-5 months or 6 months, you sell. So when you put all these costs, all these things are factored into, you deduct them from you add them on kind of overhead costs in this logistics. You deduct them, you get your profit.
I hear you.
Because the cost of finance, if you put 5 million, you are going to make at least 5-6 million.
So that's about 1 million, give or take. That's the return you. Okay. I hear you. Okay. So see, Obi, if you can hear me, I'm out of the spaces. I can't see anybody. I can't add up from anybody. So you are in charge. Yeah, I know, but I can't. I'm out of Twitter. Kicked me out, so I am in, but I don't see any buttons to do anything. Just let you know. So we might have to start to wind down, right? Because we've been here for about 2 hours and 18 minutes. We've got about, at the time, about 165 guys just plugging in here. Everyone sharing their own views of investing. If did you have anything more to say, or?
So when you talk about buying stocks again, the market is very volatile in Nigeria. I've been doing my research across that line, and I found out that the Nigerian system is not sincere.
It's not Nigeria, it's everywhere. Stocks everywhere are volatile. Everywhere. Right? Stocks don't.
But there are some stocks that are very expensive, but you know definitely you make your money.
Okay.
The likes of Steel globally, the likes of Tesla, because somebody was saying something years back that somebody bought Tesla for 15,000 naira. After 6 years or so, it went to about 700,000 naira. Yeah, but it's the same. It's the same. I mean, look at it this way, right? It's the same. Okay. If I bought my first stock I bought in my life was First Bank. So I bought Standard Bank. I tried one time to calculate my return. I could not. It was too much. The stocks plus the market appreciation plus the bonus shares I've gotten from when I bought that Standard Bank. I remember when Standard Bank sold their shares in Nigeria. I bought those shares. I wasn't even invested in. If I tried to calculate the return today, I could not. The calculator could not take it. I hadn't sold them. I just bought 200 shares. So it's the same everywhere. If you buy a good company, the good company will make you a good return. The problem is that many companies are going to fail because they should, because the market has what we call Schumpeter. It has got to remove laggards and bring in new folks. Same thing in America. Some companies have died, you know. Where is GE today? I know Singh was saying I was going to buy GE, and my friend was saying I was going to buy GE. But GE was top company for about 5 decades. Where is it today, right? So stocks are never, should we say, they never offer a fixed return. They're always volatile and they're always based on how good the company itself is. But I get your point. What I'll say is look for a good company. And what's a good company? A good company is a company that's going to make earnings into the future. It's that simple. If the company can make earnings into the future, then you have a good company in your hands. Buy it, keep on buying it, reinvest your dividend. Another thing I look at, because beyond the stocks or whatever, I'm still trying to understand the business model around the NFTs, the crypto, the metaverse.
If you're my friend, so I'll tell the truth. That thing is luck. There is nothing fundamental or investing about NFTs, especially. It's luck. If you had bought, because it's artwork. What makes one artwork better than the other artwork? What makes the Bruce Maguire good and the other art not good? It's in the eye of the beholder. But look at it this way: if you had bought a Bored Ape, if you had bought the Bored Ape NFT when it just came out, you'll be a millionaire now, right? But why is that one different from the other one? So if you buy the right one, you make a lot of money. NFTs make you a lot of money. But there is no, how do you know that this NFT is better than that NFT? If I can get Davido, if Davido is my friend, I can do an NFT of anything and make a lot of money just by him promoting it. Yes.
Okay, for you to promote the project.
Correct. So it's really artwork. If Davido says he likes it, 100 people will like it, the price will go up. The price goes up, more people will see it and more people will buy it. So it now becomes this greater fool theory where the next purchase is making it a better purchase. You can make money off it, don't get me wrong, but you cannot then tell me the formula to use to select the next NFT that's going to make money. So that's the thing with NFT. With crypto,
NFT, there are those projects every year that come out.
What is a project? NFT is artwork that has a license. That's all it is. There's nothing project about it. It's an artwork. I can do NFT of my book. I can do NFT of my shirt. I can do NFT of your belt, right? And it's just a picture then we attach a digital certificate saying that it's only one of these that exists. And because it's a unique product with limited supply, then the price goes up. So we can do a series, we can do NFT series of Nigerian footballers or Kocha NFT, Peter Rufai NFT, and people will buy. It's like playing cards, right? So what makes Peter Rufai more better than Austin or JJ Okocha? If more people buy JJ, Austin or Okocha, the NFT will go up. If people don't buy Yakubu Egbeni, the NFT will go down. That's essentially what it is, demand and supply. But what causes the demand for Austin or Okocha? We can't tell you. I can tell you what will cause the demand for Apple or for Amazon. But what will cause the demand for an NFT? No one can tell you.
And so, I'm looking at the crypto space too, because yesterday I was having a conversation with a friend, and he was telling me that 2017, Shiba Inu sold their coin, that somebody bought with $2 and he was able to make $77,000 off it.
Yeah.
And still, to be sincere with you, I don't really understand how the crypto space works.
Yeah, so if like I said, because you're my friend, right? So I think Obi wants to kick us out. So what I'm just saying is this, right? In the end, stocks move up in price. Every asset in the marketplace, including rice, including cars, including NFTs, go up in price because of demand, and they fall in price because of supply. If more people want to buy a stock, the stock price will go up. So the answer is this, right? What makes a stock go up? Earnings. NFTs have no earnings, so you cannot say the earnings of an NFT will make it go up. So what makes an NFT go up in price is going to be demand. Same thing with Shiba Inu. Shiba Inu solves no problem. Dogecoin solves no problem. But the stock price of Dogecoin and Shiba Inu are going up big time. If you had bought Shiba Inu with $1, you're a millionaire today. But it solves no problem. There's no fundamentals. There's no earnings. That's the problem we have. So I appreciate you. Obi wants to say something. Obi, go ahead.
Okay, so so I wanted to talk about what Carlos mentioned, and I think like you said, NFTs are not the same category of other investment assets. And you see, one of the things you need to understand about NFTs is that they are just derivative of other assets like artworks, music, and other intellectual property. So what makes them sell is the demand, the ecosystem, the community, and those behind it. So it's not really a definite rule that this NFT will definitely be successful. We've seen NFTs that have like questionable fundamentals come to the market and breaking records, and we've seen NFTs that have solid backups and they're not doing so well. Now, for the crypto market, just like Carlos rightly mentioned, you need to understand there are different kinds of coins. Now, many coins, they thrive on community. Now, Shiba Inu, Dogecoin, they have a very strong community. Now, you need to understand why Dogecoin has a very strong community. Elon Musk, and you know the impact Elon Musk has on the crypto market. So that was why we saw really call it rally. But this is the problem. Because they don't have any new use case, when the rally stops, they melt like ice cream in the sun. And that's why you saw Dogecoin dropping from over 70 cents to about 13 cents as we talked about.
Did you hear that? So, ice cream in the sun. Oh, gosh.
Yeah, so they are very, very assets. So I think what God is trying to make you understand is that while you have definite instruments to pick when investing in assets and stock and bond, NFTs, you don't have such parameters. Although the crypto market is moderating, but right now we have all sorts of useless or questionable projects that a lot of investors are losing money. But if you want to ask general questions on how to invest in the crypto market, do not invest more than what you can afford to lose. Also, look at assets that have solid team, solid use case, strong community, and traded on top crypto exchanges. That will give you some safety. It's not a guarantee, but at least you are sure that you will survive at least while many points.
Thank you so much.
2022, you have to be careful.
Perfect. Thank you so much for
that.
that.
To say that the crypto space looks like a Ponzi.
No, it's not a Ponzi. There's nothing illegal about it, or it's not a Ponzi. It is that the fundamentals cannot be determined by past performance or by, say, intrinsic value. It's not a Ponzi scheme. There's nothing illegal about NFTs or crypto. It's just that we cannot tell you why demand will go up and down. He has given you a clue. He said the fan base around it. Remember, I said Davido. If Enyimba Football Club does an NFT, right? The NFT is going to go up in price because Enyimba boys will buy. If Barcelona has an NFT, right? Lionel Messi, the PSG has got a coin. I think it's a coin or token. When Lionel Messi joined PSG, the price shot up because those guys who are buying their coins, it's not linked to Lionel Messi in any way. But because Messi is coming to PSG, the price went up, right? So this is the point. It's based on the fan base, the gut feeling, just hey, let's all go buy, then the price goes up. But you can't tell me why that particular issue, that artwork is going up in price. When it was small, we have comics. We used to read Commando comics. And in Commando comics, some are just good. Everybody wants them. Some nobody wants them. But that comic, why is that comic worth so much? No one can tell you. But the kids will tell you that particular comic is worth 10 other comics of the same type. That's NFT. Exact same thing happening. Now what, my brother? Now what? If I but you must buy my book and send me picture that you bought my book. You must do it. All right, sir. Thank you so much for always dropping by, right? Investor, is that investor? Is that Dr. Ola? Unmute and speak, please.
Mr. Carlo,
Sir.
if you are interested, we talk. We can discuss of.
You know where to reach me, sir. You know where to reach me.
Okay, no problem.
So, all right, investor, go for it.
Okay. Yes. Good evening, Mr. Carlo. Good evening, Opia. Good evening, everybody. My name is Investor NK. I'm the founder of the Palm Academy. So, I heard. Thank you, Mr. Carlo, for the privilege and for hosting the space. So I heard him say that NFTs are log-based projects because they're artworks, right? I really don't displace the place of luck in trading. Neither do I displace the place of risk in trading. But I really don't 100% agree that NFTs are log-based projects. These are my reasons, right?
Okay.
Now, when you buy an NFT, or when NFTs are non-fungible tokens, right?
Yep.
The reason why I bought a pond is because of the people behind it,
Good.
right?
I agree.
When you launch a project, there are maybe venture capitalists, there are celebrities, there are investors, there are influencers backing a project or talking about a project. There are venture capitalists talking about this project. Now, the community, and also there are some NFTs that have value. Some NFTs, their place is to maybe give you social status. Like for instance, now anyone who owns a born NFT, like you bought an NFT that feels like a god, right? You're chilling with big boys. You get what I'm saying? So, in as much as luck plays a role, in as much as risk plays a role, but it is not just the reason why NFTs boom. It's not just reasons why crypto booms. Now, Mr. Lumide talked about Shiba Inu, why Shiba Inu boomed. Shiba Inu and Dogecoin, they don't really have a place in the market, but they have a value. They are meme tokens, right? They have something that their own is just meme tokens. So that in its own self is already a value attached to this thing. A clown has a value. A clown has a role it is playing, making you laugh. So the reason why these things now pump, like Mr. Carlo has said, demand and supply. Right? The people interested in this, the community behind it. So there are NFTs that actually have value. Some give you social status, some maybe just for the feeling. Sometimes people create NFTs, like of recent, I started making research, and people are creating NFTs for women. That people are creating NFTs to talk about women rights. And people are creating NFTs maybe to talk about wine. Like yesterday I was in space and someone was creating a project around the wine culture. And then people are creating NFTs for the LGBTQ.
So there are different reasons why NFTs are there.
Good
Now,
point.
remember, I
Good
said,
point.
do not display. What do you say?
I said good point. Good point.
Yeah, so I do not displace the place of luck. I do not displace the place of risk, but it is not the end of it. Remember, two truths can coexist. So we shouldn't just push out the fact that, oh, this thing is about luck. That way, you're going to make the people who are coming into the NFT space begin to not want to understand the craft, not want to study the craft. They'll begin to gamble. They'll begin to just want to buy this NFT because it's going to be luck that will make it, that's going to make it pop at the end of the day. So I think we should also push it to them that yes, luck plays a role, but when you are buying an NFT, understand the value, because when an NFT project is launched, they'll tell you, okay, this is what we seek to do. So understand the roadmap, understand the community, understand the venture capitalists or maybe the influencers behind it, the people who are pushing, even the team, down to the team that is creating this project. It is as important as what the NFT is standing to do for you. Because the person creating the project can the person carry out this particular project. For instance, imagine, okay, with all due respect to everyone here who is Christian, imagine our Daddy Gio creating a project for LGBTQ. It doesn't make sense. So you have to study the person creating this NFT. Does he have the capacity, to carry out what he's saying? So in as much as luck plays a role, let's also tell these people that, because when you say it's a luck-based project, everybody now begin to gamble, like the every Dick and Harry coming to this space, I say not lucky. So I think that's what I have to say.
I think you're well said. I've been schooled. Well said. I take your point. I think it's very valid the way you have talked about the use case and the crowd and why it is set up. I think it's a very, very good comeback to my point. I've been schooled. I've been educated. I thank you for that. If you can also post it on Twitter, I think it's wonderful. So we'll see the other side of it. Yeah, great job.
Yeah, so
sure.
Yeah, so investor, talking about what we said. Now, if you understand what we're talking about, value, when we mention value, we're talking about use case. Do you understand? Every asset is in some way has value. Whether you look at it from perspective view, whether you look at it as utility view. You understand? Now, in NFT, if you look at even the Bank of England regulators, SECAM, they tell you that these are very risky assets. One, they are not liquid. Two, their fundamentals are not viable, like they're not standardized. So yes, I mentioned earlier that you need to look at the team, the composition, the community, those things well, but still those are not the nature, those are not the core that will really tell you that we have gotten a good project. So I'll give you a statistic. Now you look at DAPA data, for example, look at transactions around the NFT space, you realize that it's just very few NFTs that are really getting those vibes. And why? Because they have a very strong community. Now, the most successful marketplace on earth is OpenSea. Why? Because they have a very big ecosystem. And the fact that transactional volumes there are quite substantial just tells you that it is not really much about the fact that there is a use case or value around that. But see, we are not disputing the fact that NFTs have brought in some form of intellectual capability, like the fact that you can tokenize. Look at now, I can keep my documents on blockchain. I can tokenize my works and cannot be destroyed by fire or other things. Do you understand? So yeah, those use cases. But right now, the speculative nature has not made it a very stable investment for people that cannot really, people that really don't have substantial capital. If you have millions of dollars, why would you not get your NFTs? So we advise people that if you are going to get NFTs, be aware that these things have substantial, very high substantial risk, because the risk is very important. You need to understand the risk of going into it. Unlike stocks, it's very difficult for a stock to go zero. It's not like you see stocks going zero, but it very happens. The NFT space, we've seen so many. We've seen rug and pull moves and things like that. So I just wanted to highlight, yes, I agree with you that it's not just all the fact that it's, but regionalize that they are substantially risky and very speculative.
Excellent back and forth, guys. I love it.
Sorry,
No, go for it.
I want to say this. All you said is true. remember, I also said that two truths can coexist. Now, here's the thing. Considering the theme of the space, where should I invest right now? Now, I think I learned this from Dr. Ola. For a person like me, I have been in the crypto industry for a while. I've studied crypto, I've studied DeFi, I've studied NFTs. But I wouldn't call myself an expert because if it comes to NFTs and crypto, I'm more of the technical analyst. Like, I love charts, right? For someone who does not understand the craft, who does not understand that this thing is a speculative asset or a speculative stuff, right? That's a person that will invest so much money into it. Okay, now imagine people who support, most of these tokens before, or most of these NFTs, whatever they are, before they get to a certain point, they most times start from zero. I don't know if you understand. So you want to tell someone who doesn't have so much money not to invest in speculative assets. I don't think I really buy that idea. Because some of these things start from zero. Are you good? Okay, if you come into the crypto industry, right? Yes, crypto is maybe speculative, but I really don't buy that it's very, very speculative because you can actually study this thing to understand. When you say it's speculative is when you really don't even understand what this thing is about. If you understand the fundamentals of these things, I believe you will be able to know which one to put your money in and which one not to put your money in. However, I don't advise someone who has little capital to come into the crypto industry and be an investor. I don't advise someone who has small or little capital to come into the crypto industry to be an investor. I would rather advise coming to the crypto industry to be a trader.
What's the difference? What's the difference between an investor and a trader in crypto space? Walk me through it.
Let me say this, right? A trader is a person who takes advantage of short-term price movement. For instance, I sit on my chart and I analyze technical analysis, right? I do my TA, and I know that okay, this token is going to pop from here to here. If you go through my Twitter page, you will see different analysis that I have done or I might have done, right? I know okay, this book price is moving from $1 to $1.2. I take advantage of that. An investor is someone who would study a token fundamentally, sentimentally, technically, however he wants to study it. And then he buys and he hodls. What people say, hold on for dear life, HODL. And then he holds for a long term. However, although Bonking taught me that long term, short term, middle term should also be an investor's mindset, not just long term. Because how long is long term? So for someone who has little capital, come into the crypto space with the mindset of trading. Trade, make money, then invest your profits, not your capital. Because if you put $100 into a token and you want to hold it for 2 months, won't you eat? Won't you maybe pay your rent or something? Meanwhile, in the 2 months you're holding that $100, expecting 100%, you would have made up to 1,000%, taking advantage of short-term price movement.
Okay, let me head the other side. Does he have to come back or are we good? I mean, I agree with both of you. Two truths can exist at the same time, but I think his major point is still the same. This in investing is still fundamentals, right? It's still fundamentals. I get her point. I see where she's coming from. Yeah, yeah. Hello, guys.
Hello.
Yeah, I can. I can't say anything, so you're in charge. My screen is dark.
Yeah, so are we wrapping up now?
Yeah, we're wrapping up. Geez, guys, we've been here for close to 3 hours. We're about 2 hours and 45 minutes, right? So just allow me to just do the closing ceremony as usual, guys. We're always here Saturdays by 8 p.m. West African time. And we talk about money, capital markets, investing. Just want to learn from each other, everyone bringing your game and then we can share and learn. This week is open house. We always do an open house at the end of the quarter or at the end of the month where we just talk and share. This has not been a mistake or has not been unimpressive. It's been very impressive. I've learned a lot from everyone that has come on tweets to talk, and I appreciate you all. All right, guys, thanks for tuning in. Obi, you want to say bye? And then we can sort of wind down formally.
Yes, thank you very much for staying up until now. And thank you to all of you. this space wouldn't have been this interesting if you were not here, if you had not been there. So thank you once again.
Exactly,
And
guys.
do join us today.
All right, guys.
Please and remember to secure the bag.
All right, guys. All right, guys. Remember to get the book, right? My book is out. Let's Talk About Your Money, Step-by-Step Guide to Personal Financial Planning, available on Amazon. Amazon will not deliver to Nigeria. We're giving you an option to buy on the website, www.carloaje.org. We're also speaking to a bookstore in Nigeria to get the books to Nigeria so you all can buy and learn together. I would appreciate it. Thank you so much for listening. Obi, we're going to shut down the room, right? And I think you have to shut it down because I have no controls. So thank you, guys, and goodbye to everyone, guys. Bye.